Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking in on the market rundown heading into Wednesday, April 5th. So we had an inside bar today with the range fitting completely within the wide range of yesterday with decreasing volume, which is normal of that pattern. We did close strong up near the high of the day. We have the middle Bollinger Band resistance of 235.65. If the bulls can break the high of today, tomorrow, 235.58, we will be looking up at the couple of resistance levels left here from the high of this bounce, 236.03, and more importantly, the double top, 236.51 and 52. If we get a break of 236.52, that is a very technically significant development in the sense that the bulls have broken the lower high and lower low pattern that started at the beginning of March. So as of right now, that is the pattern we are in, and right now the bounce top 236.52 is just another lower high. If we do break that level, we then have established a higher low compared to the low of the pullback, and then a higher high heading back towards the FOMC high and the all-time high. So it's very important to watch 256, 236, 52, and the low of this pullback here, 233.91. That is the level that the bulls want to be their higher low, looking for continuation. The weekly time frame still holding exponential supports. We're on the verge of a bearish MACD cross. We can see the bulls fend that off if they continue to hold these exponential supports strong. But if we lose those exponential supports, we will see a bearish MACD cross. We will likely see a test of that recent low that we saw here of 231.61. So it is pretty important to watch these exponential moving averages. This 8 period has been holding, really both of them have been holding since the election, and we just lost the 4 period for the first time 2 weeks ago. Question is going to be, are we going to lose the 8 period? But as of right now, the bulls are defending that level. IWM was weaker on the pullback day yesterday and weaker today with seeing lower lows. It's an indecision candlestick, which would favor the bulls because it's coming after a pullback. So the IWM bulls are hoping that their higher low is forming at the low of this candlestick of 135.35. And they're going to need to see a nice green day to confirm that that is the new support level to be watching. Because as of this point, we have our low, or I should say our high, low, lower high, lower low, lower high, and the bulls are looking to form their higher low just like the S&P 500 did. We are on the verge of a bearish TCG cross of the 4 period crossing the 8 period to the downside here on the weekly time frame, and we need to be watching that. We fended it off yesterday, or last week I should say, as we were very close to seeing that follow through. But as of right now, bulls are holding on, and if we lose the middle Bollinger Band and those exponential moving averages, we will be looking for that bearish TCG cross. And you can see just how back and forth we've been going here on IWM, which is the weakest of the 3. It's gone green, red, green, red, green, red, green, red. We have not seen 2 weeks in a row with continuous direction in months. So as of right now, bears in control, trying to form a higher low, and we'll see if the bulls show up tomorrow. QQQ clearly the strongest, and a green Marubozu candlestick today. Open was the low, high was the close, and we're looking at the all-time high. We've hit new all-time highs 3 days in a row, and we've got 132.81 as that all-time high, and we're less than 30 cents shy of that level. Bulls have momentum. We're on the verge of a bullish MACD cross. Tech sector is still extremely strong, and the weekly time frame is still holding the 4-period exponential moving average. Have not seen 2 red weeks in a row since the election. Bulls are in absolute full control of QQQ, and the loss of the middle Bollinger Band would be red flag number 1 for the bulls. But as of right now, we are well above that level, over $1, and that's not really on the radar yet at this point in time. So we don't even have any lower highs to be watching on QQQ. That's the most significant difference. I just pointed out on SPY and IWM, the lower highs and lower lows for March. We have a low and then a higher high. It's a completely different technical setup, and the psychology of the pattern is completely different as well, much more bullish. So I appreciate you watching. We'll check back in tomorrow to see if some of these bulls can show back up and break the lower highs. See you then.